prices, this buying opportunity that you were referring to earlier. And let's talk Naspers. That stock out with results today. Headline earnings per share up 21%, dividend increasing 14% to 235 cents, and we saw revenue up 5% to 28 billion rand. Is this a buying opportunity now that Naspers is below 260 rand, closing over 1.5% lower today?
Naspers is a bit of a tricky one because, of course, their biggest asset probably in the future will, of course, be Tencent. You know, and at any one given time, I logged on to the QQ website, which is the instant messaging website that they run, and there were over 89 million people logged in. I think the all-time high of unique subscribers at any one given time is 109 million. So it's mind-boggling. And revenue generated from online gaming, which is, I'm sure, is not something you and I would even think about doing, seems to attract an enormous amount of interest and actually accounts for nearly 50% of Tencent's revenue. So I had a look at a few analyst presentations, and they suggest that revenue could double from, quarterly revenue could double from Q1 2009 all the way to the fourth quarter of 2010. So certainly that looks astonishingly bullish. If you want to buy the share based on as an NAV play, I think Naspers looks incredibly cheap. But nobody really wants to believe it, and I think it's simply sometimes the valuations of Tencent get people's feathers perhaps a little bit ruffled. But the same report suggested that at current levels, 2 years out, it's trading on 17 times earnings. So for a stock that's growing that quickly, perhaps a 40 times historical earnings is justified.
Khulekani Dlamini, Afena Capital, in our Cape Town studio. Khulekani, what do you make of Naspers' results and the fact that it is below 260 rand? Is this a buying opportunity in your book?
Well, you know, the standard sort of conditions, we don't advise on these kinds of things. But I mean, at current levels, it does actually look cheap. I think the gentleman who's sitting there with you was saying it. On a sum of the parts basis, it actually looks exceedingly cheap. If you just take, for example, the cost price that they paid for some of their assets, you can easily get to almost 60% of the share price. So just on that basis, when the value unlock does come, as the earnings come, you know, you should expect to actually see a little bit of an upswing in value coming through. So yeah, definitely cheap.
Earlier, I listened to an interview with Chris Becker that was conducted by Stephen Gunyon in Power Lunch, and he was equally excited over the Ibibo story in India, which could ultimately replicate the Tencent model that they have in China. It's not at the same stage of development right now, but they're going to leverage expertise of Tencent and really push that asset in India. Is that for you something to be excited about?
To be honest, at this point, it remains a bit of a free option, purely because the consumption behavior that the Chinese have has not necessarily manifested within the Indian market. Now, you know, one can talk to sociological issues that actually, you know, sort of cause the difference in behavior. You can also talk to sort of money that's available to be spent. But one of the very key sort of variables one looks at is the penetration within the Indian market. I think I saw a stat saying that the Indian market is almost 50% penetrated, which sort of goes to about 500 million people that have cell phones. Now, you know, in that market, replicating the Tencent type of model, the barrier to entry looks relatively low. So if they can find some killer application that the Indians would use in a similar manner as the Chinese have taken to in terms of Tencent, they actually would have very quick adoption and a very large market to play in. So it is a free option that is potentially quite exciting.
Khulekani, it's actually Sasha here in Johannesburg. How are you?
Hey, Sash, how are you doing?
Fine, and you? Khulekani, I've got a question for you.
Excellent.
Re Naspers specifically, and what you would value the South African business. So if you were to separate, say, and strip away an NAV play, what would you value the South African assets at? Thinking that perhaps maybe it's not a growth market anymore specifically, or perhaps margins are going to come under pressure?
Sure. The manifest sort of destiny or the truth in margins actually in SA seems to be pointing the other way. I mean, if you look at the pay TV business, the margins seem to be expanding. I think when we saw 25%, we thought, wow, these are large margins. I think we're now sitting north of 30%, and it looks like it's expanding. So, but I mean, in short, you know, I would not be uncomfortable paying about 50 to 60 billion just for the pay TV business alone. The other businesses, the print business, it's in my mind a business that is in secular decline. So that business is easily another maybe 15, 20 billion rand. So, you know, the SA business alone could account for about 70 billion rand of your NAV. And then there is the African business, the African pay TV business, which also is actually growing from strength to strength, which probably could add another 5 to 10 billion rand. So you actually can get very close to, you know, the current NAV on SA alone.
Now, Khulekani, I know you don't put target prices out there, and you would never advise anybody right now to go in and buy Naspers, but do you think it can go back to that 320 rand level?
At this point, the unfortunate thing is it's a function of Tencent. If once again the sort of froth that came around Tencent when it sort of hit the 60 times earnings does return, the market will just mark Tencent to market and by and large leave the SA assets valued fairly low. I mean, if you look at the SA assets currently, you actually can get easily sort of 4 to 5 times historical earnings, you know, on the current earnings base. So, and obviously stripping out the value of Tencent. So it really is conditional on Tencent. I mean, on a breakup valuation, this business should easily be between 350 to 400 rand.
Khulekani, thanks very much, as always, for that perfect opinion expressed on Closing Bell today.